I actually just got off a call with Alphabet CFO Ruth Porat, and we talked about the trends that they've reported, dug in a little bit to that slowdown in advertising that they saw starting in March. And she told me what's most important is we did see that slowdown in March, but given the usage trends we're seeing, we remain really optimistic about long-term trends. What's notable is the breadth of our business, users across industries, verticals, and behavior shifts from one area to another. So basically, John, Porat saying that while they did see a big slowdown in ads, it was only in March, and they didn't see slowdowns really anywhere else through March. What do you make of that?
Right. So so if you look at the overall advertising market, right, it's going to get hit. That's what really, people are talking about. And that's what you can see, particularly in those businesses, where you can measure on a month-to-month basis. Obviously, March was pretty horrific, down 10% overall. However, I think what people might be missing is that that there's a shift going on, right? And a shift from offline, from traditional sort of linear media, right, broadcast media, to online, interactive, bidirectional communication kind of media, mobile platforms, social platforms, right? And which obviously search and YouTube are great examples of, right? And so what happens in a period of economic uncertainty and a real downturn where there's pain, right? I think you're going to actually see that shift accelerate, and that is kind of an offset. I mean, revenue growth is going to accelerate for Facebook and Google. Is clearly already decelerating for Google, but I actually don't think it's going to be that bad as the overall industry, and they're going to come out of it, a year from now even stronger than they were. I mean, people may not realize traditional media was 50% of overall ad spend as, just last 2018. So 2019 was the first year that offline, exceeded it. So there's a lot of room to run. And I think this this unfortunate economic situation might be a catalyst, actually.
Now, I did speak to her about where they plan to continue to invest, because they've been very careful about saying they're not cutting budgets, they're not freezing hiring, they're slowing hiring down, and they are going to continue to invest in strategic areas. She said they're very focused on long-term opportunities, including search, cloud, machine learning, hardware, and they're looking at levers that they can pull to moderate spending. Now, the big question is, as you alluded to, well, what is Q2? What does the next quarter look like? How much further does ad spending continue to slow? And she said she didn't want to get into that on the call with me, but they would be getting into that on the call that's happening right now. So I'm looking at the terminal and watching for headlines as they roll in. But what do you think? I mean, just how bad could it get when it comes to the ad business?
So it's a great. So let's say, let's say advertising's down 20%. That would be, in the second quarter. Maybe it's down 30%, but I think, if it's down 20%, obviously that would be global, because, there are some areas that are, opening up faster, because they got hit earlier. Obviously there's caveats, how bad are the aftershocks, the epidemiological, pandemic aftershocks of this? That's a kind of a wild card. But if you have that, then I still think Google puts up positive growth because of the shift, because of YouTube. The engagement in YouTube is going, through the roof. Obviously, a lot more younger people are at home and they're sheltering at home. Younger people tend to skew, right, toward the YouTube demographic, right? YouTube also has some of the lowest ARPU, of any of these platforms. It's very cheap to advertise on YouTube if you want to, right? If you really want inexpensive advertising, there it is, right? So there's that advantage that I actually think Google still has, positive growth. I think, it's tough to say. Maybe it goes into the high single digits, but I still think it's healthy, and they come out of this, a lot healthier. You talked about, pulling spending back. I would say this. I don't think they need to do that. I mean, they have so much cash, right? Nobody's worried about this financial stability of that company, right? And so as an analyst, looking at it, if they miss a couple more quarters on EPS, but it's valuable because they continue to invest in driverless cars, self-driving cars, quantum computing, cloud, these kinds of things. I'm not as worried about it because obviously they have the financial flexibility to do so.